Welcome, friends, to the EFC India Limited conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Before we go ahead, here is a quick introduction to the company. Pune headquartered EFC India is the first listed company in integrated serviced office and managed office space. Founded in 2014 by first generation entrepreneur Mr. Umesh Sahai, the BSE listed EFC India has a presence in 35 plus centers across 7 cities. EFC India operates under different business verticals under the brand EFC, Sprint, White Hills and Egg Design. Unlike other industries players, EFC India offers comprehensive end-to-end solution to businesses in office space management. This includes helping customer identifying right properties, supporting negotiation with property owners, furnishing and designing the property according to the client specification, and carrying out ongoing management and maintenance function on behalf of the client. White Hill Interiors and DNB Verticals provides interior design and commercial space furnishing solution backed by strong supply chain enables. EFC India is on a trajectory of rapid growth with a sharp rise in net profit at rupees 63.17 crores, a 312% increase in total sales to rupees 428.78 crores, and significant jump in EBITDA to rupees 191.92 crores. This impressive financial figures underscores the company's commitment to profitable growth and margin protection. EFC India has total asset under management of 1.9 million square feet. The company has a total sitting capacity of 40,000 with an average rental per seat of rupees 6,250. It has also contracted to add more than 4 lakh square feet of leased space across Pune, Noida and Hyderabad. The DNB vertical closed the single largest contract with Coforge for developing 1 lakh square feet of commercial space in FY23-24. The company planned to increase its seat capacity from the present level to 92,000 seats by March 2026. With India ranking as the second largest co-working market globally and estimated 60 million square feet of flexible office stock available, EFC is poised to seize this opportunity. The company plans to substantial expansion over next 3 years, aiming to become a significant industry player by developing an integrated ecosystem in the real estate service sector. I would now like to hand the conference over to Mr. Umesh Kumar Sahai, Managing Director of EFC Limited, to give his opening remarks. Thank you, and over to you, sir.
Good evening, everyone. I am Umesh Sahai, Chairman and Managing Director of EFC India Limited. It gives me immense pleasure to welcome you all to our very first analyst and investor call. Your presence today is testament to the interest and confidence you have in our journey and future. Let me start by giving you a brief history of the EFC group. The idea of EFC came to me in the early 2010, inspired by the need to provide innovative office space solution in India, an idea that was ahead of its time. We started as a small company with a single center in Pune offering about 99 seats. From this humble beginning, we have grown into a leading name in the managed office space and co-working space sector. With a strong presence across India and over 40,000 seats currently. Our journey has been remarkable. We run bootstrap over the year, demonstrating reliance and strategic foresight. It was only in 2022 that we become the first ever listed company in India in this space, making a significant milestone as we raise our first ever funding. This achievement underscores our commitment to excellence and sustainable growth. The managed office space and co-working space industry has undergone significant transformation over the past decade. According to the recent report, India commercial office stock is standing at 832 million square feet as of December 31st, 2023 in the top 9 cities. Grade and Grade B stock bifurcation 85% to 15%. Flex office space occupancy about 1 million seats spread over 65 million square feet across major cities in India. Initially driven by the need for flexible work environment, the sector has now become a cornerstone of modern business infrastructure. In 2023, co-working space accounted for about 20% of the total office space absorption in major Indian cities, reflecting a strong and growing demand. EFC Ltd has a successful establishment itself as a significant player in the dynamic market landscape. Our consistent profitability sets us apart in an industry often marked by volatility. The success can be attributed to our strategic foresight, robust business model, and relentless focus on customer satisfaction. We have continuously adapted to the market need, offering innovative solutions that cater to a diverse clientele, and our ability to remain profitable in a competitive market is a testament to our strong operational efficiency and effective management practices. In addition to our core offering of managed office spaces, we have strategically diversified into interior fit-out and furniture manufacturing business. This division have not only broadened our revenue stream but have also created a significant synergy with our operation. The integration of this business allow us to offer a comprehensive solution to our client, enhancing the experience and satisfaction. Our interior fit-out division provide customized and efficient workspace design, while our furniture manufacturing division ensure high quality agronomic furniture that meets the evolved need of modern workspace environment. Looking ahead, we are committed to continue our growth trajectory and further solidifying our position as a market leader. Our focus will be on expanding our footprint and leveraging technology to enhance our service offering. Sustainability and innovation will remain at the core of our strategy as we strive to create workspace that are not only functional and aesthetically pleasing but also environmentally and socially responsible. We will continue to explore new opportunity and partnership that align with our vision and value, ensuring long-term value creation for our stakeholders. In conclusion, I want to express my gratitude to all our investors, analysts, and stakeholders for your unwavering support and trust. Together, we will continue to build a future where EFC India Limited not only thrives but also set new benchmarks in the managed office space industry. Thank you.
Thank you, sir. I now request Mr. Nikhil Dilipbhai Bhutta, Whole-Time Director of EFC India Limited, to discuss further.
Good evening, friends. Thank you for joining us today for our analyst call. I'm Nikhil Bhutta, Director of EFC India Limited.
Sorry to interrupt, sir. Your voice is breaking.
I'll start and I guess audible just now?
It's still breaking, sir.
Okay. How is it now?
Yes, please go ahead.
Good evening again for our analyst call.
Sir, your voice is not audible. It's breaking in between, sir. Umesh's voice was clear, sir.
Is it fine?
Yes, sir. This is a bit better.
Again, for the introduction, friends, this is Nikhil Bhutta, Director of EFC India Limited. We welcome you all to our first analyst call. We really appreciate your continued interest and support in our company. Today, we'll be discussing our financial and operational performance for the financial year 2024, highlighting some of the key strategic decisions that our group has taken and sharing our outlook for the future. For the financial year 2024, EFC India Limited has delivered strong financial results with top line on consolidated level reaching at around 428 crore with EBITDA margin of about 44.76% and PAT margin of about 14.76%. These figures are truly reflective of our resilience and strategic focus and the management's commitment to growing the company forever. Our strategic decision to venture into commercial interior fit-out division and to implement backward integration by establishing a furniture manufacturing unit has been really instrumental in driving the growth and the success for the company. This initiative has not only helped us to increase our top line but also enabled us to achieve significant cost saving and also achieve the efficiencies which are very much critical in our industry to really establish or create a differentiation. While the manufacturing unit will be fully operational in FY 2025, our interior fit-out division is already witnessing an upward trend. As we speak, we have already become a kind of a preferred vendor to a lot of large corporates and organizations across, and we are delivering successfully on a timely basis with quality services to clients like TCS, Coforge, and many more, which is all marking a significant milestone for our group to go to the next level, not just this vertical complementing our existing legacy business of managed office space, but creating a SBU which itself is profitable and creating its mark in the industry. Looking ahead, EFC India Limited, which is positioned in a favorable market environment with an integrated business model of real estate as a service provider, we are fully geared up to deliver even better performance and create substantial value for our shareholders. Our strategic initiatives and robust business model place us in a sweet spot for future growth and success. I would like to take this opportunity to thank our dedicated team for their hard work and commitment to the organization goals, and also our stakeholders for their continued trust and support. We remain committed to driving growth and creating value for all our shareholders. I'd like to take this opportunity to invite our CFO, Mr. Uday Vora, to present you all a little more detailed numbers on the financials for the FY24 and take you through the various aspects relating to the same. Mr. Uday Vora.
Thank you, Mr. Bhuta. Good evening, everyone. A warm welcome to EFC India Limited analyst call. This is Uday Vora, CFO EFC India Limited. Moving on to key highlights for fiscal year 2024. We have set a strong footprint in 7 cities in India, covering about 1.9 million square feet area under management. We have total 50 sites under our management across these 7 cities in India. The total seat capacity has crossed 40,000 mark. Moving on to some key financial highlights. As mentioned earlier by our director, the total consolidated turnover that EFC has achieved is to the tune of 428 crores on a console basis, achieving an EBITDA of about 44.76% and a PAT of 14.76%. So of this, the segmental breakup would be the rental segment that clocked about 263 crores, which is about 62.2% of the total revenue, whereas the revenue from D&B business stood at 113 crores, which is approximately 27%. The revenue from furniture business stood at about 46 odd crores, which is nearly about 11%. While we speak about the quarter-on-quarter seats, the billing seats on quarter-on-quarter saw a rise of about 10.7%. There is a year-to-date growth in seats, which rose to about 41.54%, signifying our strong hold into the domestic market. I thank you all, and I now open the forum for question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Sahil from Columbus Capital. Please proceed.
उमेश भैया, सबसे पहले तो आपको बहुत कॉन्ग्रेचुलेशंस, बहुत अच्छे नंबर्स Q4 में भी और FY24 में भी.
थैंक यू साहिल जी, थैंक यू साहिल भाई.
सर, मुझे आपसे बेसिकली AIF और रीट के बारे में थोड़ा समझना था. जो हमने नोटिफिकेशंस दिए हैं कि इनके थ्रू सर बेसिकली एक तो इसमें बिजनेस मॉडल क्या होगा और इससे EFC में सर क्या मतलब इम्पैक्ट पड़ेगा टॉप लाइन या बॉटम लाइन पर.
अच्छा, मैं इसका आपको रिस्पॉन्स में निखिल भूटा जी देंगे. निखिल सर.
So I think Sahil ji, AIF and REIT, जो ये हम business model, business structures that we are trying to bring into as part of the EFC's overall growth story. The idea behind coming up with AIF and REIT is that we need, going forward, we need to go and control some of the real estate assets which we are actually right now managing and operating. As an operator, we are a service provider and we, work on an asset-light model. And hence we want to continue with that model when it comes to our rental space business is concerned. But when it comes to creation of assets, we would like to create this fund structures whereby we would be one of the sponsors to the fund and bring other contributors, other potential unit holders to the fund. And together we want to acquire assets, and again we want to use our expertise of which we have acquired over a period of last dozen years to manage those properties in a most profitable manner and also offer the same kind of returns to our unit holders under AIF, so that which is in the market today. If you see the standard yield that you kind of generate for a commercial property is between 7 to 8%. But when you convert these properties and run it like a managed office, you are likely to earn much better returns. And that is what we are trying to aim and trying to create a differentiation in the market, that we probably will be one of the first one to come in the market and run AIF for the investor as an operator and not just as a real estate developer or not just as an investment fund manager. So that's the structure that we are trying to implement, and that is how we are trying to, complement the business that we are doing within our EFC India group.
Nikhil sir, what I was trying to just understand is that from the point of view of EFC India Limited, which is the listed entity, basically if we think of the top line and bottom line, will it impact in any way?
Yes, obviously, because what will happen is that the operation of these assets would be done by EFC India Limited only. So the whatever that revenue that we'll be generating from operation of the assets, which we'll be charging a fee to the AIF for operating, managing and marketing those assets, right? And those fees will directly add to our bottom line.
Got it, sir. That was my question. Thank you so much.
Thank you, Sahil.
Thank you. Next question is from the line of Dhruv Mukesh Bajaj from Smart Sync Investment Advisors Service. Please proceed.
Hello? Yeah, sir. Firstly, congratulations on reporting an amazing set of numbers, and thank you so much for hosting your maiden con call. My first question was that we have recently set up a subsidiary called EFC Estate Private Limited. So, will this subsidiary be involved in our plans of expanding into REITs, or this will be a completely different business segment of establishing IT parks like someone that Nesco does, basically? So, if you can give some picture regarding that.
Yes, we are looking at such, Dhruv, thank you for this question, but we are looking at this SPV to participate in some of the strategic investments that we would like to make as a group, where, we see, obviously in the market, we get a lot of opportunities where, whether it is development of IT parks, whether it is, development of large commercial A-grade properties, and any which ways, as a part of our business model, we need to, kind of block this property for us to manage going forward. So we are, kind of taking those strategic initiatives and participating in those assets in certain level. We are ensuring that our commitment is purely to ensure that those assets come under our management by the time they really come up fully furnished. and which helps us in consolidating or increasing our stocks going forward. So EFC Estate Limited will definitely look for making such strategic investments into IT parks or such commercial properties that we feel where there is an upside on its own from the investment point of view, and also another upside in terms of securing rights for managing those assets, either through getting the leasehold rights or otherwise.
Got it. So, but how will we fund these investments? Like in REITs, we are raising funds from other investors who will be our unit holders. But in EFC Estates case, will we use our internal accruals, or do we plan on raising some funds? Like if you can give.
At present, we are planning to use our internal accruals because we are not going very heavy on this investment. But, as you can appreciate, we are generating substantial revenue year on year internally as well. So we'll be, kind of earmarking some portion of it for making investment of such nature.
Got it, sir. That is very helpful. And sir, can you give an overview regarding the potential margins profile for all the three segments? Let's say 2-3 years from now on, because we have clocked around 15% PAT margin in the current year. However, the revenues from furniture segment were very minuscule. And since Umesh ji in one of his interviews mentioned that the revenue potential for furniture business can be 300 to 400 crores, and since it's a manufacturing-based plant, so I think so margins will be much higher if we work on a higher scale. So if you can give some idea, like how should we look at all these three divisions?
Yes, why not? I mean, so since you have touched the manufacturing of furniture first, yes, the manufacturing of furniture, as our MD, Mr. Umesh has said, that will definitely contribute that level of turnover. But the margin level, it would be, easily would be around 40% that on an EBITDA level that would be making under this division. When it comes to our rental space business, the margin level on an EBITDA level, is between 30 to 35%, and you factor in for the occupancy level, then averages out to on a center level at about 30%, and on a corporate level it comes out to around 24-25%. On an EBITDA side, and on the DNB, that is design and build division, the EBITDA and PAT in design and build more or less remain the same because it's a negative working capital kind of a business where except for the investments that we have to make in terms of recovery from the receivables, there is not much investment that is required on the capex side. So the recoverability on an EBITDA level there is about 16 to 17% on a DNB division. So that's an ideal situation that we'll be able to achieve going forward. And right now the blended margin, as you can see on a PAT level, is at about 14.67, which is, which if you convert into an EBITDA level, it is much better. So on a PAT level, going forward, again, it will remain between 15 to 20% with the inclusion of furniture division. The PAT, contribution would also increase on a group level.
Got it. So that is very helpful. And sir, can we get a timeline regarding the production that will start from a new furniture facility, and how will the scale up happen? Because it has a huge revenue potential, but I don't feel that the immediate capacity utilization will be very high. So how are we looking at utilizing that particular capacity, and by when will the production start? These are the two questions.
Yeah, we are expecting production to start in the second quarter. All the machinery, obviously the plant is already almost ready in terms of, the renovations, etc., and the structures is ready. The machineries are already all ordered and about to get installed within this month. So obviously the trial productions and the pilot production will take place, and we're expecting it to really go live in the second quarter of this financial year. With regards to achieving the top line from this business, you appreciate that in all our businesses, the way these businesses are designed internally, the EFC India's legacy business, which is the managed office business, is always an anchor client for this all units. So, we already have over the last about 9 months developed the capability to start even on a smaller scale manufacturing the workstations that we really, and the chairs that are the major kind of furniture requirement for the co-working or the managed office players. One of them is us as an anchor client. So that business would immediately, begin, and we don't really need to find a market for this because, as I said, we'll be one of the lead consumer ourselves. The requirement of these furnitures are also quite voluminous when it comes to the managed office players in our industry. So I think the turnover also we will be able to achieve substantially this financial year. With the scale that we are expecting, the overall target that we are setting, we believe that we should be able to at least achieve, if not more, at least around 50% of what we really are setting to target this financial year. Hello?
Mr. Dhruv, does that answer your question? As there is no response from Mr. Dhruv, we'll move to the next question from the line of Malhar Manik from MM Capital. Please go ahead.
Thank you for the opportunity and many congratulations, Umesh sir, Nikhil sir, and the whole team for fantastic set of results. First question is there any target for what kind of AUM we are expecting on the REIT side, and also if you could explain what would be the fee structure for that?
I think we are right now in very close discussions with our consultants, lawyers, and those structures are getting formed up right now. So I think we need to keep this question for the next quarter's session because at that time we'll be in a much better position to give you more precise answers to these things. Right now, like I said, everything is under on the forming up stage, please.
Sure. And sir, just from a longer term perspective, I wanted to understand how you are thinking about the culture of EFC and how that affects your hiring practices also. Like what do you envision as the culture of EFC?
It's a nice question. Culturally, we as an organization have always remained, if you kind of relate to how a technology developers really, classify themselves or call themselves, we like to call ourselves an agile players. We always like to be on top of things. We always like to be taking ownership, proprietary calls on kind of transactions that we all are involved into. So we always want that our team is, while we like to maintain a lean team, but the team needs to, are always 100% contributing to their capacity. And we believe that we should be able to drive this culture forward. We are a very closely knit group. It's maybe sometimes sounds cliche, but we work like a family. And that's the kind of environment that we try to create within us. And I think going forward, yes, this will be challenging situations because, we are getting into various businesses. We are getting into various diversifications, and every business demands different kind of culture, different kind of requirements. Like manufacturing has a different mindset, service sector has a different mindset, IT sector has a different mindset. So, we got to kind of combine those situations, but on the core of our culture will always remain those proprietary commitments, those family value appreciation, those, taking care of each other like a strong, neatly linked family, and we continue to be like such.
Sure. Thank you so much, sir, and all the best. Thank you so much.
Thank you.
Thank you. Next question is from the line of Chinmaya Bhargava from Badrinath Holdings. Please go ahead.
Hi, am I audible?
Yes, you are. Please go ahead.
Okay, thanks for the opportunity. So, in looking at the cash flows in FY24, I'm trying to understand the receivable line item that we have. I understand, in our business, there's a split between interiors, the training business, and the co-working space. Could you just give me